Hello there and welcome to the Indian Insight channel. This is the first video after the 2024 elections in India. So today I'm going to cover a lot of indices, a lot of markets in this video. The agenda for this video is to cover a little bit on coalition politics and how you should look at sector allocation in era of coalition politics. We'll look at Nifty and various sectoral indices. We'll also look at Bitcoin, gold and silver, and also we'll cover S&P, Dow and Nasdaq and what is likely to happen going forward in these different markets. Let's start with one quote. Conspiracy is just another name for coalition. This quote is by the famous author Robert Wilson, and this should be the guiding principle for you as far as what is going to happen in politics going forward and how it will affect the market. The dynamics of a coalition government is very different from a government that has full majority, and this should be obvious to you by the fact that the current Prime Minister before elections was talking about a 100 days agenda, and it has been almost 20 days since election, but you have not seen any movement, or at least we are not hearing about the 100-day agenda that he was talking about during his election campaign. So this is what coalition governments do. They slow down the decision making process. That's the negative of a coalition government. The positive is that you need to discuss with your partners before making major decisions. So that's the positive side of coalition politics. And the negative side is that decision making will be a little slower. Now this here is the election result, and I have essentially put this chart here so that we can judge the stability of the government, because the stability of the current government or any government that is formed going forward as a result of these elections is going to always be an issue for the markets. Currently, the NDA coalition consisting of BJP and other parties combined with TDP and JDU, which are their major partners, this comes to around 292. Of course, there are some reports that they have support from some other independent candidates as well. So this total may be higher. In contrast, the opposition has also around 230 seats. Now, for stability of the current government, it is important that these two partners, the TDP and JDU, stay with them. They can add more stability to their coalition if they can somehow manage to bring in more partners. Now the probability of that happening, you should decide for yourself, because it is very hard to predict. But if any of these parties or any other parties can come with them, then obviously their stability and their ability to bargain for the BJP will increase, and that will add to stability for the government, and that will help them take faster decisions as far as policies are concerned. In contrast, if somehow the opposition manages to break away any of BJP's partners, coalition partners, only then they will be able to form a government, but that will be a more fragmented government, and that would be even more impaired as far as policy making is concerned. Now, how should you do sector allocation given the fact that the current government is a coalition government? Now, here I am classifying the sectors into three categories. First is the sector that is primarily government policy driven. These sectors have rallied because of the government policies of last 10 years. This would include railways, defense, PSUs, some industries like sugar which have benefited from specific policies of the government. Any danger to the current government or any pressure from the coalition partners may affect these sectors first. Then another category is decadal themes that are playing out in the market They may be policy driven, they may be thanks to the policy of the government in the last 10 years, or they may be occurring more organically, more naturally because of people's preferences. For example, financialization of savings is a theme that has emerged post COVID, and people are looking to shift their investments from traditional savings instruments to other kind of instruments like equities. Similarly, EV is a decadal theme that has been playing out. It is partly policy driven, it is partly being pushed by the government, and also a lot of people by their own preferences are going for EVs. Then healthcare is a decadal theme that has happened post COVID, as people are now more health conscious. So that is another theme which is somewhat policy driven, which has some focus from the government, but which is not totally dependent on the government. Then there are themes that are likely to work irrespective of who rules or who is in power. So themes like agriculture or consumer themes or undervalued stocks in general are likely to do well irrespective of who is in power, because they have to find ways to boost these areas. So for example, agriculture is an area which no political party will be able to ignore. So this is going to benefit irrespective of who is in power. Now, if you want to insulate yourselves or relatively insulate yourselves from political risk, then you should focus more on these two categories of stocks, basically decadal themes and themes that are likely to benefit irrespective of who is in power. So these two themes are going to be the themes that you should focus on. The major risk you will find is in PSUs, defense and railway stocks, because they have largely been policy driven and they have largely benefited from the policies of the current government, which has already ruled for 10 years. So if something happens that either negatively affects the stability of the government, or if something happens that makes the government more stable, then you will see corresponding fall or corresponding rally in these sectors. Now, before we get into all the different charts, here is a disclaimer. My name is Yash Utmani. I am an AMFI registered mutual fund advisor and an educator. Please do your own research and consult a financial advisor for your investing decisions. All views expressed here are only general commentary and they are not meant to be specific investment advice. Here's the chart of Nifty. The Nifty made a panic low on the election day or immediately after elections, and since then we have seen a slight rally. Now, while we cannot rule out a bit of a pullback in this chart, for now I think the panic low becomes an important level. Apart from that, the important support levels for Nifty are at 22,758 and 22,300. Similarly, important resistance will be at around 23,700 and 24,400. There is currently a long-term target, pattern target for Nifty that is in play, which places the Nifty target for around 25,274. I'll be a little surprised if we see a panic fall from here. There may be some knee-jerk reactions, but a reversal from here now seems a little unlikely. We may see a small fall. We may go and test the 50-day moving average or a 100-day moving average, and then we may try to rally again. But since we have made a panic low, generally market should continue to inch in the upward direction. This is a chart of the Nifty 500, the CNX 500 weekly chart. Currently it's trading around 22,236. This has similar price structure to Nifty, and I think while it is possible that it may try to test the 50-day moving average or the 100-day moving average, more or less I think there is a decent chance that this continues to inch higher. There is a pattern target pending of around 22,582, and it is possible that slowly this index will inch upwards towards that pattern target. This is the Nifty Commodities Index. The pattern target which is active for this is around 11,500. This is trading around 9,125. This chart is actually relatively less bullish, but it still has potential for upside. The important support levels are 8,835 and 8,493, and the important resistance is at 9,600. The RSI in this case has been diverging from the upward price action, but it is still possible that it may try to climb up to the 11,500 pattern target for this index. The Nifty Energy Index also follows a similar price structure as the previous chart. Here the current market price is around 40,457. The important support will come around 40,050 and the 38,626 level. Important resistance is around 43,084, and there is a long-term pattern target which is pending for this index, which is around 47,312. Again, you see there is a divergence on RSI, and it has not been able to clear its pre-election results highs, and that's largely because of uncertainty around the stability of the government. The CNX Finance Index, the finance index has been decisively bullish. I think this can be one of the themes that can do well irrespective of who is in power. At least for the short term, it can do well. On the long term, of course, everything can unravel if the government takes a terrible policy decision. So that is irrespective of who is in power. The current price for finance index is around 22,990. The important support is around 21,787 and 21,383. The important resistance comes around 23,400 and 24,600. There is a long-term pattern target of 26,000 which is pending for this index. Nifty FMCG Index has corrected post-election results, but it has also a pattern target which is pending that stands around 64,200. That is about 10 to 12% away from its current market price of 55,990. Important support levels is at around 55,596 and 54,940. Important resistance level is around 58,830 and 60,978. This chart looks relatively less bullish for some reason, but I won't pay too much attention to it. Maybe it tries to test the 200-day moving average before it rallies substantially. Then we have the CNX Infra Index. This is again an index largely driven by the policy of the government. Again, it has not been able to break its pre-election results high, and it's trading around 8,853. There is a pattern target which is pending for this index as well, which is around 10,097. Now, important thing about these pattern targets which I'm saying is that you should understand that these are not immediate targets. When I say pattern targets, I don't mean that the market can immediately rally to these levels. It may happen that market spends a lot of time correcting before it tries to rally towards these targets. So you should not look at these pattern targets as any trading recommendation or anything, but yes, there are some patterns active which are pointing to these targets. Then you have the media index. I had shared a YouTube short when the media index was trying to break above the highs here, but it was never able to break above or close above these highs, and so we have seen a major correction. Again, there is a possibility that the media index might recover because it also has a pattern target which is active, and this is quite substantially higher at 3,700. These are long-term patterns that have emerged, and they are pointing to a target of 3,700, around 3,700 on media index. However, the price action has not so far been encouraging. The important support levels for this index is around 1977 and 1936. Important resistance is around 2264 and 2508 levels. Then this is the metals index. Metals index, it seems, was also driven by the government policies. It is trading around 9,990. It has also not been able to break above its pre-election results highs. The important support for this index is around 9,407 and 8,893. The important pattern targets which are currently active are around 10,686 and 10,885. Now the Nifty Midcap Index is trading around 20,735. This looks like it's in advanced stages of its rally, and there is a possibility of a correction towards the 50-day moving average and 100-day moving average. That said, its long-term pattern targets are way higher from here, almost 40% higher from here. So the long-term pattern targets are at 28,713. So from a long-term perspective, there is still room for this index to rally much higher. But in the short term, we may see a bit of a pullback in this index as well. Then we have the Nifty Pharma Index, which is currently trading around 19,528. This also has a long-term pattern target which has been active for some time, and this is around 23,300. The important resistance for this sector is around 20,000 level. Then we have the Public Sector Enterprises Index, the CNX PSE, which is currently around 10,605. This is also trading below its pre-election results highs. The important support for this index is around 10,165, followed by 9,557. Very interestingly, it has a very high long-term pattern target of around 29,754 that is pending from a long time. And so PSU sector looks like it has rallied a lot. And the fact is, if you look at the long-term pattern targets, then it can rally much higher from here. So as per me, whatever happens over next 1 year, maybe this index corrects by a lot and then rallies. Maybe the government falls, maybe a new government comes in which has full majority, or maybe this government is able to somehow manage its numbers very well and complete 5 years. That is possible. Or maybe there is some other issue, maybe there is a midterm election and this index falls, and then again a rally resumes. The fact is that public sector enterprises over the next decade may still do very well. Now for the Nifty PSU Bank, the current market price is around 7,384. This is also not able to go above its pre-election results highs. The important support for this index is around 7,242 and 6,941. The first long-term pattern target for this index is around 10,713, but there are other long-term pattern targets that are pending for this index as well. And so over a decade, maybe even this index can still do well. The Realty Index is trading around 1132. The important support is around 1017, and there is a long-term pattern target of around 1279 pending for this index. The Nifty Small Cap 100 Index is trading around 18,235. The important support is around 16,916 and 16,273, and it also has a long-term pattern target which is pending of around 29,500. So over a long period, this index can also surprise people still more towards the upside. Then we have the Bank Nifty, which is trading around 51,660. This index also has a long-term pattern target which is pending, which is around 54,470. This index has been able to break above its pre-election results highs, which actually signifies that irrespective of who is in power, this index is likely to do well. Next is Bitcoin. Bitcoin has been consolidating around its all-time highs. The important resistance for Bitcoin is around 70,808 and 71,906. It has multiple active pattern targets. One of them is around 1,45,823, and the current market price is around 63,000 to 65,000. It is very volatile. So I have kept a range of current market price. The important support will be around 60,797 and 57,900. Bitcoin per se has many active pattern targets for the long term, and I have shared one of the lower targets here. I'll share more targets in other videos on Bitcoin. Gold is trading around 2322. The important support for gold is around 2256. Important resistance is around 2450. And there is an active pattern target which is pending, which comes to around 2660. So gold is bullish and it looks like it is going to continue to rally. Same is the case for silver, which is currently around 29.53, and it has an active pattern target of around 38.79. You may see a stronger rally in silver compared to gold, and this has been covered in our other videos as well. Then we have the S&P 500. Now a lot of people are talking about how there is little participation of the broader market in this rally. So only a few stocks are primarily driving this rally. And while this is true, but markets can still continue to rally. These same stocks which have done well can continue to do well for some more time. And there is an active pattern target of around 6,066 for S&P 500, which is pending. And this is just one of the targets. There are higher targets that are also pending. The important support for S&P 500 is around 5,275, and the important resistance is around 5,720. Same is the case with Dow Jones Index, which is trading around 39,150. The important support is around 38,000 and the important resistance is around 40,051. This index also has an active pattern target of around 44,000, which is pending for it to achieve. Nasdaq is currently trading around 19,700. The important support for Nasdaq is around 18,676. The important support is around 18,676, while the important resistance is around 20,457. The active pattern targets for this index is around 22,167. Again, these targets are only indicative. It is true that this rally is also driven by only a few stocks, but the thing is, such rallies can still continue for some more time. With that, we come to the end of this video. I hope you liked it, and if you did, please remember to subscribe to this channel. With this, I would like to say goodbye. Thank you for watching.